Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Okay, welcome out to this video from Tackle Trading, and this one is about volume. And volume in trading is an important metric, a very basic metric, but one that we need to make sure we're using correctly. By definition, volume is the number of shares or contracts that indicates the overall market activity of a security or market for a given period. There are certain things we're looking for with volume, but a big question would be, so how do we use volume when we're trading? And there are many different ways that we can use it. I would say first is make sure that you have the correct number of shares or minimums, traded on a given period. Generally, what we say is about 1 million shares every day is a very liquid company or ETF to trade. As little as 500,000 or 300,000. If you're buying the stock, you might only need 50 or 100,000 shares traded per day if you're investing for long term. But trading, generally, you want more volume. My own personal guideline when I'm looking at it, I'm looking for 1 million shares or more. And I actually prefer some of the biggest companies in the marketplace and the biggest ETFs in the marketplace because it does provide liquidity. Now, same thing with futures and forex and options. It tends to be that if you have a larger underlying volume in the base of the product, you're going to have larger volume and more liquidity in the options contracts. So look for liquid products. Number two is it can actually be a very important technical indicator. Volume confirms price. When you have a strong upward move, if you have an increase in volume, that's a confirmation that institutional intent is behind the move, and that's a very, very helpful thing to look for. It can also indicate the very first beginning phases of a reversal. If you're hitting the market bottom and a lot of volume comes in, that's probably indicating that buyers are stepping in to find the bottom of the market. If you're at the top of the market with a certain market patterns, which are reversals, high volume pressure can indicate those and confirm the technical patterns that we look for when we're trading. It does confirm price action. Large volume bar with a big candlestick means that's institutions coming in and moving the market. It can be an indication of momentum changing, and that's one thing that we look for when we're looking at volume candlesticks. And if you think about it, volume really is a reflection of conviction. The only reason why volume would spike 2 or 3 times higher than a normal day is if somebody comes in and really wants to play ball. Usually, when I say play ball, I mean trade, or get active in that market. If volume is really a high number for a given period, that's probably institutions showing you their hand a little bit, kind of confirming what the overall conviction of that marketplace is. And increasing volume generally and increasing conviction for bullish, in an upward move as well. So if you have high volume, increasing volume, and the trend is going up, that's usually a good sign for bulls. If the increasing volume is going up as the market starts going down, that's a good confirming sign for bears. Decreasing volume is decreasing conviction, so usually lighter days, not much going on. You got to be cautious in low volume environments. You can get some kind of weird activity in those. And so usually traders kind of stay away from them. And really, I think of volume as an overall reflection of institutional intent because let's be honest with ourselves here, who really controls the volume in the market? And that's the big boys, the institutions. So keep an eye on that. And really, that's big money, Use volume from recent trends and moves. I would not go back and look at volume analysis from 10 or 15 years ago, maybe for context, maybe to get some ideas about how volume might work. But outside of learning history, I would really, if you're trying to understand today's trade, look at the current volume. In the last 3 months, 6 months, 1 year, certain situations within that trend or pattern is where I would focus. And there are some volume indicators. There's probably dozens and dozens and dozens of them out there. Two of the main ones that if you're looking for them, one is called the on-balance volume, another chalk and money flow, which are very, very popular volume indicators. So this has been a video. Thank you for joining us at Tackle Trading. Tackle Trading is the premier online community for traders. Come and join us, Tackle Trading. We have a lot of different ways you can get connected with us. Obviously Facebook at Tackle Trading, Twitter at Tackle Trading, Instagram at Tackle Trading, and our YouTube channel, which we have just hundreds and hundreds of videos over there for your educational purposes. Get in the game, tackletrading.com.